Welcome to Industry Focus, the podcast that dives into a different sector of the stock market each day. It's Monday, April 29th. I'm your host, Jason Moser. On today's show, we've got some more earnings to get to. As always, we'll have one to watch. We even have a nice tweet to read out. But we begin this week with another installment of Between Two Fools. Elizabeth Overbay is COO of Goldman Sachs' Consumer Banking Division, including Marcus by Goldman Sachs and Clarity Money. Dustin Cohn is the head of brand and marketing communications for Marcus by Goldman Sachs. As Financial Literacy Month here in April winds down, our own Matt Frankel sat down to talk with both of them recently about the problems with financial literacy in America today and how Marcus is trying to be a part of the solution.
Thank you for joining our podcast on Financial Literacy Month of all times. So does the Marcus team see financial literacy as a major problem in the U.S. and aside from creating its financial products, what is Marcus doing to address the problem?
So it is a real opportunity in terms of what Marcus by Goldman Sachs can provide to consumers by way of education. There is a lack of information out there, and consumers are also a bit ashamed that they don't have all of the answers, and sometimes that shame creates inertia, and they don't look around for their options. Even simple things like a savings account. We found through our proprietary research that 60% of consumers don't know their interest rate, and about the same number never even shopped around when they opened up their savings account in the first place. And as we all know, there are some pretty big banks out there that are offering, as little as 0.03%, where Marcus by Goldman Sachs offers 2.25%. So, a significant opportunity for consumers to, save more money in that example. What we also do outside of our actual product offerings is provide content. We have a content hub on Marcus.com with lots of videos and articles and tools to help educate consumers about their options and get them more comfortable with the fact that there are better ways to save and budget and earn money. And if they feel a bit more confident in their ability to learn and apply those learnings, they can actually really improve their financial health pretty significantly.
Excellent. So on that note, Marcus has something going on called the You Can Money campaign. Can you give us a little bit of overview of what that is? Sure.
You Can Money is our new tagline, our new campaign, and it really taps into that emotion that I just described in terms of consumers feeling a bit ashamed. They lack confidence in their financial abilities, and if we can inspire consumers to look around and see what options are available to them, that could give them the confidence to improve their financial health. So You Can Money, is sort of our way of call to action for consumers to really get their heads out of the sand and see what's out there. And then on a more rational front, You Can Money is about the fact that you can earn more interest, with a savings account like Marcus by Goldman Sachs. You Can Money, meaning, you can pay off credit card debt and potentially lower your interest rate that you're paying. You Can Money by just better managing your budget and your spending habits through tools like Clarity Money. So, You Can Money is that emotional aspect, that empowerment, that sort of jolt of optimism that you can do this, and it's also a rational message that we have products that can actually help you do this as well. So You Can Money launched a couple weeks ago. We have TV, print, radio, outdoor, lots of social media and digital advertising, and a big part of it is trying to educate consumers that there are easy and simple and fast ways to improve your financial health.
So speaking of your products, Marcus has two main varieties of products. You have your lending platform and you have your high yield deposit platform. And you had mentioned the proprietary research that Marcus does. And I remember from our last conversation that the personal lending side, you guys did a ton of market research before you even launched to address some consumer pain points. Do you see that as one of the big reasons Marcus has grown so fast? And do you still see this as a big addressable market, or is personal lending kind of getting as big as it's going to get?
No, I think we are still really excited about the road ahead. I think we still think we're in early innings for Marcus by Goldman Sachs. We, still see a lot of unmet need in the market, really going back to your first question about financial literacy and, to Dustin's point about the education we can help do to help customers understand that there are better ways to manage their debt. And so, certainly as we think about the early launch of Marcus by Goldman Sachs, we were really focused around better debt management and helping consumers learn about better ways to manage the debt that they had. I think as we think about the opportunities going forward, we think about a lot of other opportunities for customers to manage their finances better as we think about, for instance, home improvement expenses or moving expenses, a much better way to finance those expenses rather than putting them on a credit card. The same thing with opportunities like travel and vacation spend, really helping customers understand that there's a smarter way to handle those kinds of expenses rather than carrying them just on their cards.
Okay, and the same kind of question in terms of the high-yield deposit platform. It's fair to say that high-yield deposits in general, not just Marcus, still make up a very small percentage of the overall deposit base when you think of all the traditional brick-and-mortar banks. So you mentioned educating the consumer is a big obstacle to this, but I would think that, especially with the big interest rate increases over the past couple of years, that a lot more people would start taking advantage. Why do you think that so many people are not taking advantage yet of high-yield savings?
I think it gets back to the point that consumers are in a state of inertia oftentimes, and they have a savings account that they've had for decades. Sometimes they open it up for free checking, and that money sits there and sometimes is overfunded. And when that money just sits there, obviously it's not earning the interest it could use. I also think there is obviously a shift into digital banks that is happening probably more slowly than it should. Oftentimes consumers just like to know there's a branch for them to physically walk into, yet those same consumers can't stand that experience. And once they learn that they can do all that same banking online, and avoid the overhead, quite frankly, of the branches, then they realize how easy it is to earn more money with a digital bank like Marcus by Goldman Sachs. So, really is a lack of awareness and sometimes just that complacency that comes from having a savings account and a checking account that they've had for decades.
The Marcus platform has grown a lot faster than most experts have predicted. Last summer, David Solomon, who was at that point your president, he's now your CEO, he gave a presentation talking about a bunch of future growth opportunities, which really caught my eye, just because there were about a dozen things, and right now you do, pretty much two. So he mentioned things like mortgages, insurance products, auto loans, things like that. Where do you see the biggest opportunities in consumer finance for Goldman Sachs beyond your existing lines? And I know you can't really speak to any product development going on, but just which of those do you see as big opportunities? Do you still see about a dozen opportunities going forward?
Yeah, we still see a lot of opportunities in the market, as we think about the pain points that customers have in terms of dealing with their finances. Those pain points exist across a whole host of categories, and we think any number of those could be interesting opportunities for us as we think about our opportunity to impact our customers. As we think about what we see on the horizon, we've talked a little bit about, the merger that we're doing internally with our colleagues in the investment management division. We're excited about the opportunity to expand our business alongside some of the infrastructure that they have. And so things like consumer wealth management, definitely something that's sort of near and dear to our hearts that we see as an interesting opportunity going forward. And so, we've got a lot of different ideas sort of in the lab, so to speak, and some of them, as you can imagine, kind of rise to the top. Excellent.
So, since I last spoke with you guys, Dustin in particular, in October at the Money 2020 conference in Las Vegas, it's been about 6 months or so. Can you give us an idea of kind of what's Marcus's big priorities right now? What have you been working on since then, and what can consumers expect over the next year or two from Marcus?
We're constantly looking at the marketplace and talking to consumers to understand what their pain points are in the industry. Most recently, we talked to consumers about CDs, and one of the things that came out of that was a new product offering no penalty CDs. So we have a number of different offerings where if you take out your money before the term, you can do that and not be charged any sort of fees, which is pretty consistent with our no-fee offering across loans and the lack of fees on our savings account as well. So, as we think about what's next for Marcus, we're constantly talking to consumers about their experiences in the world of financial services and identifying those pain points that we believe that we can solve. And as you know, Goldman Sachs really prides itself on being consumer-centric and customer and client-centric. We are a technology-based firm. We are very good at risk management, and we look for opportunities where we can solve pain points, and there's a big enough market for us to really succeed and not necessarily have to have a huge market share in that market. So we're exploring a lot of opportunities as usual, and putting the consumer at the center of everything we do is really the secret sauce.
So speaking of pain points, just to kind of give our listeners some ideas of what you're talking about, when you guys developed the personal lending platform, that was a big thing, is to solve a bunch of consumer pain points. So can you just kind of give us a rundown of the pain points that your existing products specifically solve for the public?
Sure. Talking more about no fees in our personal loans, a lot of consumers are very surprised that they are charged origination fees, and you get approved for $10,000 and you only get $9,500 because the lender takes out that $500 as an origination fee. People are frustrated when they pay down their loan early and are charged fees. And of course, late fees. So we actually launched our product and continue to maintain our product with absolutely no fees, no origination fees, no late fees, no fees for paying down early. So that was a major pain point. Not to mention, consumers are typically surprised about that origination fee, which was another pain point in terms of being transparent and being very simple. So you'll note that even on our website, we're really clear in terms of how we make money. And that's a question we get pretty frequently. If you don't charge fees, how do you make money? Well, very front and center on our website, we describe that we make money on interest, and we don't need to charge fees. We also use language that is very straightforward and transparent. In fact, as we talk about origination fees, we don't even call them origination fees. We call them sign-up fees, because we want to use very basic, straightforward, simple language. That was another big pain point consumers have, is all this sort of jargon that a lot of financial services speak in terms of. We want to make sure that everything in terms of our communications is very straightforward, very simple, no jargon. Another pain point was being able to talk to a customer representative. And so when we launched lending, while it certainly costs us more money in terms of being able to staff our call centers appropriately, we don't have any sort of machines that you need to sort of be put on hold and press 2 for this and 3 for this. We actually pick up the phone, and oftentimes consumers are really surprised by that. One of my favorite stories from a consumer, we were doing some call listening, and we picked up the phone, and the woman on the other line started laughing. And the agent asked her, well, why, what's so funny? Are you okay? And she said, well, I shouldn't tell you this, but I'm actually in the bathroom. And she said, I called you thinking I would be put on hold and I'd have to press a bunch of numbers to get to who I needed to get a hold of, and I'd have some time to sort of finish my business. And of course, she asked us to call. She asked us if it was okay if she called us back. But that's another example of a pain point where consumers are just so used to being put on hold and having to deal with machines before they actually talk to a person. We solve that pain point, and we're able to create a situation where we surprise and delight consumers every day by being able to talk to an individual. And you may have heard very recently we won or we were ranked number 1 by J.D. Power in their personal loan category. So it goes to show you with things like no fees and a call center that picks up the phone and a great digital and mobile experience. All of those things were intended to solve pain points, and our customers are voting by putting us in the number 1 slot for the J.D. Power rankings of personal loans.
Well, if you can actually call Marcus and talk to a person at any point you want to, then I can see why they are voting that much higher. Because with my bank, I know that's my biggest pain point is if there's something wrong, trying to get a charge reversed, trying to reach a person can be maddening, especially with the automated systems that don't quite understand what I'm saying.
That's exactly right. Well, and one other pain point that I think is worth referencing as well is most lenders will tell you the day of the month that you need to pay them, and we actually give our consumers the option to pick their date that they pay us. They know when they're paid from their employer. They know when their other bills are owed, and it's a great feature for consumers to be able to manage their cash flow better. So they can pick the monthly or the date, and they can also pick a monthly payment option. So, for example, if you are looking to borrow $10,000 and you want to pay around $400 or $500 a month, we actually can issue you a loan with a tenor that could be 33 months. It could be 53 months. It could be really any combination to give you or get you as close to that monthly payment option as possible. Where other lenders fit you into like a 3-year or 4-year or 5-year, and it's sort of cookie cutter. We have a personalized feature that allows you to pick your monthly payment option and the date that you pay us. So another pain point that we identified and solved through our offering. And we obviously have the benefit of being a balance sheet lender, which allows us that sort of flexibility.
Definitely. And speaking of other lenders, it's just based on what you said, it's easy to make the case that you're doing a lot of things better than the competition. But do you see this as a market that has a lot of room for everybody to grow, or do you really see this as kind of personal lending as like having evolved into a real competitive environment?
Yeah, I mean, overall, if we look at the consumer credit landscape, it is obviously a huge, it's a huge industry overall as we think about, what's out there. And so one of the criteria that we had when we entered the space overall, and this goes back a little bit to Dustin's point, a place where there's a big market and even having relatively small market share can still be, pretty meaningful for us and therefore similarly for others. And so we do view it as a place where we can carve out a really interesting place for ourselves where we can, focus on delivering value to our customers and have flexibility around the size of the business. At the end of the day, 77% of consumers don't even know you can use a loan for a credit card balance, and so that's to us a really good indicator that there's still plenty of room to grow.
Excellent. And I know, like we touched on the dozen or so potential future opportunities, and I know you can't speak to those individually, but do you see kind of the no fee nature, the customer service? Do you see those as kind of carrying over to future Marcus products?
We'd like to maintain that consistency across everything we offer, but obviously new products may require different evaluation and different execution. But regardless of what we do, we are going to try to identify those consumer pain points. And because we have the benefit of really building this business from scratch without any legacy technology, without any legacy product, we are able to really create what we think will be the very best in class products across all categories.
I think as we think about new product development, the most important thing to us is how can we position ourselves to be on the side of the customer. And so at the end of the day, that's what it's all going to come back to.
Excellent. Well, I think I speak for all of our listeners when I say we cannot wait to see what Marcus has in store next.
Well, Well, thank you. We're really appreciative to have the time with you today. Thank you for the opportunity.
Yeah,
Thank you very much.
Thanks so much for joining me.
And now joining me in the studio via Skype is certified financial planner Matt Frankel. Matt, another nice interview there with the folks at Goldman. Good job.
Thanks. I always like talking to them. They always have really interesting points to make, and it was fun to chat with.
Yeah, they seem to be very up on financial literacy as well. I mean, that seems to be a cause that really matters to them. And clearly Goldman is steering their business in that direction, trying to utilize some of their vast resources to tackle some of those big problems. It's good to see.
Yeah, definitely. I wish them all the best in their consumer banking endeavors.
Well, maybe we'll get them back here soon. Earnings season is going on, as our listeners know, and we have some earnings that are getting ready to hit this week, but we had some earnings that hit late last week we wanted to get to here, and we're going to start with Visa. Matt, you took a look at Visa's quarter. What stood out to you?
Well, Visa's a huge company that's still growing pretty fast. I mean, revenue was up 8% year over year. Earnings were up 17%, which when earnings are growing faster than revenue, that tells you that a company's generally doing a really good job with expenses. Visa spent less on marketing, less on professional services than it did last year, despite the revenue increase, which is why you saw earnings really jump. Visa did so well in the first quarter that they actually increased their guidance for the entire year.
Nice.
And, an earnings beat, a stock could go up or down depending on the context of the report. Same with revenue beat. But when a company increases its guidance for the year, it's generally a really good surprise for investors. That's one of the only universal things that you're generally going to see, the stock react to positively. And Visa's at an all-time high right now, so it looked pretty good. They're expecting, double-digit growth this year. It's at high to mid double digits for earnings per share. Double-digit revenue growth they're expecting now. Payment volume keeps going up. Payment volume was up 8% year over year. Transactions, the number of transactions Visa processed was up 9% year over year. So these are some impressive numbers considering the size of Visa and the growth they've had over the past, 5 to 10 years. So if you think Visa's already gotten as big as it can get, this report tells you to think again.
Yeah, I think that's a good point. I mean, we talk about it all the time, but I mean, this move away from cash and towards mobile payments, contactless payments, whatever it may be. I mean, Visa is a big company, $356 billion market cap, but I mean, we're watching some of these big tech companies today that are touching on $1 trillion market caps now. I mean, obviously, those tech companies are in very big market opportunities as well. But I mean, I think when we talk about how money flows around the world, that's clearly a huge market opportunity because we are talking about basically the entire world. And we're talking about these networks that have this money just going all sorts of different directions. I mean, that is something that is only going to continue to grow. I don't think it's unreasonable at all to see Visa at some point in our lifetime knocking on that $1 trillion market cap. I mean, am I way off base here? Or what do you think?
No, and actually you mentioned that this is a trend all around the world. It's worth mentioning that Visa's international revenue actually slowed down this quarter. So Visa had such a great quarter despite bad international revenue. So international remains a huge opportunity for Visa. It's a little more than I think half of their total payment volume. But I mean, that's just a small drop in the bucket compared to their potential. Visa's barely in China yet, for example.
Yeah.
A lot of the most populated places in the world, Visa's barely scratched the surface. So there's a ton of opportunity here. I would not at all be surprised in the next, decade or so, even if Visa starts knocking on that 1 trillion market cap.
Yeah, that's not out of the realm of possibility for sure. Well, sticking on the payments theme, I mean, we'll take a look at PayPal here real quick. And I mean, there's not a whole heck of a lot to nitpick. I mean, they turn in strong numbers. Revenue grew 12% for the quarter, but they did a very good job of bringing that down to the bottom line. GAAP earnings up 34%. Non-GAAP earnings are up 37%. Any which way you look at it, PayPal continues to be a network that people are utilizing. And I think when you look at some of these numbers, I mean, it is really impressive. Total payment volume of $161 billion for the quarter was up 25%. Total transactions of 2.8 billion was up 28% from a year ago. They added 9.3 million new accounts for the quarter. That was up 15%. They now have 277 million total active accounts, which is really impressive. And again, going back to that same sort of theme with Visa, it's still such a huge market opportunity left out there. I think it was really interesting. They noted they have 40 million active users now with Venmo. And we know they're working on monetizing Venmo. That'll be something that I think they're not going to rush to do that. I think they're taking their time and making sure they do that the right way. And that's encouraging as well. They talked about last quarter, they were reporting that Venmo was operating on a $200 million revenue run rate. That now stands at $300 million. So more people sending more money through those networks. It really just gets you back to that idea that PayPal to me is one of those companies that every foolish investor really should have in their portfolio because it has so many of those great qualities that we look for, from strong management to massive market opportunities to constantly innovating. It's one you can own for many, many years to come. And I would put Visa in that same category. And I think you probably would too.
Yeah, PayPal actually makes Visa's growth rate look kind of slow. They're doing that well. And one thing to point out with that, everyone who's listened to the show before knows that I think the world of peer-to-peer or person-to-person payments is a long-term opportunity. Mm-hmm. Not only do companies like PayPal and Square, like I talk about all the time, have the same international growth opportunity Visa does, they have a big domestic opportunity as well, because while the majority of big transactions in merchants these days are done with cards.
Yep.
The majority of person-to-person transactions and smaller transactions are still done in cash. So although things like Venmo have gotten very popular, especially among the younger generations, it's still not the majority of its addressable market. I've seen statistics where, the most transactions under, say, $20 happen in cash. Yeah. So this is a big market. If I have to split the check with my friends at dinner, I'd still use cash. I'll admit I'm kind of an old school guy in that way, but eventually that might not be the case. Eventually my friends might, insist that I pay them electronically because they don't want cash. But the point is this is a huge addressable opportunity domestically in addition to internationally. So which is why you're seeing such a breathtaking growth rate for these companies that have person-to-person payment platforms.
Yeah, I think you're right. And I tend to look at it. I know we always talk about investing for the long term and thinking in years and sometimes decades, which the older you get, I think sometimes it can be a little bit difficult because you wonder how many decades perhaps you have left. But one of the things I always like to do is I look at my daughters, and they are 14 and going on 13, and I basically just try to envision what the world looks like when they're 30, when they essentially, 15 years down the line or whatever, they're around 30 years old. What's the world going to look like? And I feel like these are companies that are still going to be very relevant in what they're doing, and probably a bigger part of their generation's lives than even today. And I think that really bodes well for investors. It's not to say you hold these things blindly. You obviously have to keep tabs on them and make sure management is doing the right thing. But we're looking for big market opportunities. It's hard to disrupt the fact that you have to pay for stuff. It's just going to be a matter of how you do it. And I think that companies like Visa and PayPal and MasterCard and Square and Stripe and Stripe works with Shopify, and Shopify is getting into some hardware stuff I saw. Those are all businesses that I think are really worth a look for investors. Even today, when we feel like valuations are a little bit out there, I think that's when you really have to focus on getting those high quality businesses, and those are some of them for sure. Let's tap into Twitter here real quick. Matt, I wanted to read this off for our listeners just because, anytime you ever see these tweets where people have nice things to say, it gives you a little warm and fuzzy. You feel good. It makes you feel like we're doing this thing for a reason. And we have a listener, Kurt Adams, who chimed in on Twitter last week. Kurt said, "I just want to thank you, Industry Focus, Motley Fool Money, Market Foolery, and everyone in the Motley Fool for making my 1-hour drive to work and back fun, capital fun. I've started listening to you guys last year, and I'm learning a great deal about investing." And Kurt, thank you for the kind words, and thank you for listening. Thank you for trusting us. Promise you, we take that very seriously. We aim to entertain, but also more so educate and enrich, and hopefully help you, become smarter, happier, richer. That's in line with what we stand for here at the Motley Fool. And so, Matt, I don't know. I thought that made me feel good. How did it make you feel? How did it make you feel?
Yeah, definitely. I mean, I don't have a commute right now. As you can, people who are watching this on video can see I'm in my living room at the moment. Well, with a nice desk behind me. But at times in my life, I've had pretty long commutes. So I definitely feel for people who do that. And if I could do anything to make a 1 hour commute bearable, then we're doing a pretty decent job over here. So
that's right. All right. Well, let's wrap this thing up here, Matt. It's time for one to watch. Let's give our listeners a stock on our radar here for the coming week. What is your one to watch this week? I'm watching my favorite person-to-person payment stock, Square. I've heard of it. They're a payment processor at heart, but the person-to-person, the Cash App is, in my opinion, by far their biggest long-term opportunity. People like Jason's daughters are going to make Square rich over the years. And Square is reporting earnings in this coming week. So I'm curious to see how their first quarter went and how their Cash App's doing. If you remember last year, the number of active users doubled, more than doubled. So I want to see if this trend is continuing. I don't expect to get any hard numbers on the Cash users till the end of 2019. But Square's always an exciting report. I mean, if a bad quarter, they grow 30%. So it's always interesting to see what they're going to report. Yep, I agree. Well, I am going to be watching Amalgamated Bank. Earnings come out on Tuesday, and listeners will remember we had CEO Keith Mestrich on the show here a few weeks back. Really a fun interview, a good interview. Remember, they're the ones that are building America's socially responsible bank, and I think Keith gave us a lot of great insight as to how they're doing that and why they're doing that. And so for me, really, I'm just looking forward to checking in, seeing how the bank is growing, building up their assets and deposits, see if there's any perspective on the current interest rate environment, any new lines of business or customers that are really buying into that vision of a socially responsible bank, because I have a feeling that'll be a message that resonates with a lot of folks here in the coming years and decades. Amalgamated Bank, definitely one I've got on my personal watch list and one I'm looking forward to checking out tomorrow when those earnings come out. Matt, hey, I think that's going to wrap it up for us for this week. Again, great interview there with Goldman Sachs. Really appreciate you doing that. And I think we'll have some more interviews lined up here soon. But any parting words? I'm looking forward to a big interview we have coming up in a couple weeks that we'll just have to wait and see who it is. That's right. We'll keep our listeners hanging on every word. Thanks, buddy. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. Today's show is produced by Austin Morgan. For Matt Frankel, I'm Jason Moser. Thanks for listening, and we'll see you next week.